Hello Form 2s, this is the memo video of exercise 8.4, which is the last general ledger exercise that we are doing, and you only had to post to the big 6 accounts. I want to remind you that it's very important to use the basic framework for the format of these 6 accounts. The framework was posted on Google Classroom, and I want to encourage that you use this, especially if you are one of those boys that struggle to understand posting. Okay, it's something that you can study, and you will see that the format always remains the same. You just have to be able to find the correct values and obviously use the correct month and year. Okay, so trading inventory. Now, I want you to picture trading inventory as the storeroom of the business. And obviously, you can't start a new month in your business with an empty storeroom. Otherwise, you won't have any products available to sell to customers. Okay, so the products that is in your storeroom when the month starts is what we call the opening balance, and it goes to the plus side of the trading inventory account. You will find your opening balance here in the exercise where they said the following balances appear in the books of tricky traders on the 1st of June 2008, and then you just go and look for the trading inventory value, which was 29,000 Rand. Then you take that 29,000 Rand and you write it where it says opening balance. Okay, then the way that we can increase the amount of inventory that we have in our storeroom is by buying. And we've got two options when we buy, two journals that we use for buying. We can buy and pay right now in the CPJ, or we can buy on credit and pay later. Okay, so if we buy and we pay now in the CPJ, we use money from our bank account. And if we buy on credit, then it will influence creditors control. Okay, now I'm going to show you where to find the CPJ value. It's when you look at the cash payments journal of the business, it's the trading inventory column. And you use the column total, that's 620 Rand. And you write it next to the CPJ. For the CJ value, you go to the creditors journal and you use the trading inventory column, the 3,623 Rand. And you write it next to CJ. Then we also sell our inventory. Remember, that's why we have a business. Okay, so we trade with our inventory. We not just buy it, we also sell it. And if we sell it, it decreases the amount of products that we have in our storeroom because the customers are buying the products and they are walking out of the shop with the products in their hands. Okay, so on the side where trading inventory decreases, you will have the selling of the trading inventory. We record the cost price of the trading inventory that we sell in the cost of sales columns in the CRJ and the DJ. So you can make a note for yourself if you want to. The credit side, we use the cost of sales columns, and on the debit side, we use the trading inventory columns. Okay, so we've got two options when we sell. We can either sell the products for cash in the CRJ, or we can sell it on credit in the DJ. Okay, if you don't understand that, then study your format, and I'll just show you where to get the value for the CRJ. As when you go to the CRJ, you will see there's no trading inventory column, but remember we use the cost of sales column, and you use the total, the 1,475, and you write it there. And then for the DJ, you go to the debtors journal, and you use the cost of sales column, the total, which is 5,800 Rand, and you write it there. As simple as that. Okay, so study your format, and now you know where to get your values. But we are not done yet. You have to balance this account at the end of the month to show the owner what is the value of the trading inventory that we have left in our storeroom when the next month starts, which in this case will be July 2008. Okay, so what you do for balancing, there are 4 steps. You add the amounts together, that's on the plus side of the account. You get that total, but you write the total in the amounts column of both sides of the accounts. Okay, so you will see these two are the same. Then on the minus side of the account, you can tell yourself that that minus is to subtract. Okay, you take this value and you subtract the two values that are already there. You get the difference. That difference is then the balance that you will carry down to the next month. Okay, and then you have to bring it down on the 1st of July, again on the plus side. Okay, so you will write July or the next month, the first balance brought down, because this is now the balance that you brought down from June, and this value must be the same as the balance CD value. Okay, next, bank. Bank is super easy. It didn't change anything since Form 1. Okay, so your bank, I just want you to picture your bank account. In Form 2, we always work with companies that have a positive bank balance when the month starts, and that positive bank balance will then be the opening balance that you will find here, where they give you the opening balances in the information section of your question. So you just go to bank and you use that 44,000 Rand. Write it next to the opening balance. Then our bank account value will increase if we earn money, and that will be in the CRJ. So the total receipts that we had for this month in the CRJ will increase our bank account, and you use the bank column from the CRJ. You use that total, the 32,650, and you write it next to the CRJ. Then, if we spend money, obviously our bank account will decrease. Because bank is an asset, it decreases on the credit side. And we spend money in the cash payments journal. In the cash payments journal, once again, you use the bank column total, that 21,734 Rand, as your value there. Okay, now we are not finished yet. We have to show our owner what is the value of the money that we have left in our bank when July starts. In other words, what is the bank balance at the end of the month? So we have to balance this account. Once again, the 4 steps is step 1, add the values together on the positive side. Step 2, write that total in the amounts column on the other side as well. Step 3, get the difference between these two values on the smaller side and call it balance CD. And then step 4, take this balance down to the opposite side on the 1st of the next month and call it balance BD. Next account is debtors control, and I want you to know that debtors control is the account that means customers owe us money. It's an asset for the business because it's our money. We just need to receive it from customers. Okay, so usually companies that trade for a long time have customers that owe them money from previous months, and that will be the opening balance. Okay, so when June 2008 started, customers already owed this business money, and that's the balance that you bring down. Where will you get this? Where we got all of the other opening balances. So you go here and you just look for debtors control, which is in 6,100 Rand. Then the way that customers could owe us more money is if we sell more products to them on credit. Okay, remember, if we sell on credit, we don't get the money immediately. The customers will pay us later. Okay, so that value comes from the DJ, and you write sales DJ. It's this column total from sales in the debtors journal, the 7,200 Rand that you use. Then if customers pay us back eventually, then they will owe us less money. So on the side where debtors control decrease, we will use the value when customers pay us back. If they pay us back, we receive money from them in the cash receipts journal, and the contra account, if we have the cash receipts journal, is always bank. Okay, so you get this value here. It's the debtors control column total in the cash receipts journal, the 3,850 Rand. Then we're not done, we have to balance. Okay, so we take the values on the plus side, add them together, get the total. Then you have to write that total in the amounts column on the minus side as well. Then you have to get the difference between these two values and call it balance CD. And that is the amount that customers still owe us when the next month starts. So you have to bring that balance down to the 1st of July on the positive side. Next account, creditors control, is the exact opposite to debtors control. This account means that we owe money to suppliers. Okay, and obviously we also owe some money to suppliers when the month starts because of purchases that we made in previous months. That's your opening balance. But be careful now. Creditors control is a liability. Why? Because the company is liable to pay the money back. And liabilities increase on the credit side. So now the opening balance is on the credit side. You get the opening balance where you get all of the other opening balances. It's this creditors control value. And you write the 6,000 Rand there. Then, if we buy more and more and more stuff on credit in the creditors journal, we will owe more money. So on the side, creditors control increase. We've got our total purchases in the CJ. Okay. So you use the creditors control column here. It's very similar to total payments in the CPJ for bank. Okay, but you can't write total payments. So this 6,973 Rand is then used for the total purchases value. Obviously, we have to pay our creditors back some or other time, otherwise it's bad business. If we pay them back, it will decrease the amount that we owe them. So we write it on the side where creditors control decreases, which is the debit side. If we pay them, it will be in the cash payments journal, and we will use money from our bank to pay them. Okay, so you get this value in the CPJ. It's this creditors control column, the 100 Rand. And you write it there. Now we're not finished. We have to show our owner how much do we owe our creditors when July starts. So we have to balance this account. To balance the account, we follow the same 4 steps that we had for the previous 3 accounts, but now the plus side is on the credit side. So we just start on the right. You add these 2 values together on the plus side. You get the total. Then you write that same total in the amounts column on the minus side. Then on the minus side, you minus, so you subtract the 100 Rand from the 12,973, and that's the balance that you will carry down to July. If we carry a balance down, we take it to the opposite side on the 1st of the next month. And that's it. Now we've got our 2 nominal section accounts. So sales is when we sell products, and the reason why I made a big red cross on the minus side of sales is because in the nominal section in Form 2, we only use the plus sides of the accounts. So you can, if you want to, cross out the minus sides of an account just to ensure that you don't write something there. Okay, so the plus side of sales is on the credit side because it's an income account. And then the opening balance is now not a balance because we only use one side of an account. So we only ever total the nominal section. Okay, so we don't write balance brought down, we write total brought forward. Please remember this. I know this is silly, but this is where you lose most of your marks. You still get the opening balance where you got all of the other opening balances. So you go to your opening balances, you use that sales value, and you write it here. Then we've got 2 options. When we sell products, we can either sell them for cash in the CRJ or on credit in the D. Okay, so if we sell them in the CRJ, we will put the money in our bank. And if we sell them in the DJ, our debtors will owe us more money. That's why you write bank for CRJ and debtors control for DJ. Please don't write sales inside the sales account. Okay, so let me show you where you get the CRJ value. It's the sales column from the CRJ, the 1,950 Rand. Write it there. And the debtors control value is the sales column in the DJ, the 7,200 Rand, and you write it there. Okay, then at the end of the month, you just have to show what is the total sales value for the company so far throughout the year. So you add these 3 values together, which gives you 120,650 Rand. Don't write anything here, Just total it. And then the last account is the cost of sales account. Now, this account is to record the cost price of all of the products that we have sold. The reason why is because we want to be able to determine a profit at the end of the year. Okay, so we want to know what is the total cost of the products that we sold so that we can subtract it from the total money that we got from the customers to calculate a profit. If everything I just said confuses you, ignore that. It's a cost of sales expense account. Once again, nominal section, so you can cross out the side where the account decreases, which in this case is the credit side. We're only going to work on one side, so we have a total that we bring forward. That total is just where you get all of the other opening balances, which will then be the cost of sales value, 76,250 Rand. You write it there. Then the cost of sales values we get from cost of sales columns, and we've got two cost of sales columns, one in the CRJ and one in the DJ. You only use the cost of sales columns. Please make a note. We don't use any trading inventory columns inside cost of sales, even though we write trading inventory here. Okay, the reason why we write trading inventory is because you will notice that we also used these values on the opposite side or on the right hand side in the trading inventory account. But don't think because you write trading inventory, you use a trading inventory column. Okay, so let me show you. The one for the CRJ is this cost of sales column in the CRJ, that 1,475 Rand. And the one for the DJ is this cost of sales column in the DJ, the 5,800 Rand. And then at the end of the month, you just total all of the values, which gives you 83,525 Rand. I hope this made sense. This is now my last attempt to try to explain this to you. If you have any questions, please ask.